It's the Growing for Market podcast.
So you're paying the money for a QuickBooks subscription or you're using an accountant to help you out. But are you really getting the value out of those numbers? Not really. Not if you're just only keeping books for tax compliance. Like you want to keep books so that you can do some analysis and look at your numbers and see like, okay, those beds over there are making me some good money. Those are not. Like these crops are doing well. These ones are not in my area. Like just analyzing the numbers so that you can see where you are earning and where you are not earning so that you can make decisions for next year. Like I'm going to plant this much of this crop. I think it's really valuable. And I think a lot of people don't think about the numbers from that perspective so much.
Hello, and welcome to the Growing for Market podcast, where we talk about growing, marketing, and the business of growing vegetables and flowers for local markets like farmers markets, CSAs, farm stands, and local wholesaling. I'm Andrew Mefford, your host and the editor of Growing for Market magazine for 34 years, the magazine for flower and vegetable market farmers. If you're enjoying the podcast, just wait till you see the magazine. Go to growingformarket.com for more. Also, if you could give us a follow and a rating, it really helps other like-minded people find the podcast. And now, let's take a minute to hear from our sponsors. It's with their generous support that we can bring you the podcast for free.
Hey, it's Lindsay from Grown By. There are a lot of farm sales platforms out there, but there's only one that's cooperatively owned by farmers. And that's Grown By, your all-in-one solution to simplify farm sales. I'm proud and excited to share 2 new features now available on top of the tools you already know and love. Number 1, our customizable CSA box builder. It allows your customers to simply say what they'd like in their share, and Grown By matches their preferences with your weekly harvest. Number 2, our new wholesale-only marketplace. Developed with the Culinary Institute of America, it makes your life easier with a dedicated shop for your wholesale customers. No more texting those chefs, combining retail and wholesale inventories and records, and, drumroll, automatic payments on due dates. No more chasing down late payments. These new features sit alongside our popular online sales and traditional subscription CSA tools, making it easier than ever to manage your farm's business. As you start to get ready for next season, we'd love to hear from you and see if our cooperative can be a partner in growing your farm. Visit us at grownby.com. That's GROWNBY.com.
A well-built high tunnel is one of the smartest investments a small farm can make. It protects your crops, extends your season, and keeps income rolling in even through winter. Nifty Hoops builds complete Gothic high tunnels that are easy to install and built to last. Their easy, bolt-together construction makes setup straightforward and efficient, whether it's a small backyard hoop house or a dozen large production-scale high tunnels. Especially through their community build option, where professional builders work alongside your crew, family, or neighbors to build each structure, usually in a single day. Most growers go with Nifty's full setup: steel-framed end walls, roll-up sides, baseboards, double plastic with inflation, automated vents, and real doors. All priced to make the best choice the easy one. Nifty is a small crew out of Michigan using U.S. steel and working hands-on with growers across the country. They'll help evaluate your site, handle NRCS paperwork, and if they're building with you, they'll even float your cost share until after the build. Visit niftyhoops.com to learn more. Farm more seasons. Grow more food. Nifty Hoops. Renewal season is here, and the work you put in now is what brings members back next year. Melanie from Shake Fork Community Farm, who you may remember as a guest on this podcast, brought in $40,000 in renewals in just 2 weeks. Now she's sharing her exact strategy in a free live workshop and downloadable playbook from Farmhand. Get the playbook and watch on demand at farmhand.partners/GFM. That's farmhand.partners/GFM. Today, we have the pleasure of welcoming Sarah Scott to the Growing for Market podcast. In addition to being one of the farmers on her family's farm, Scott Farm and Flower in Western New York State, she's also a certified public accountant. When Sarah got in touch, I was super excited to talk about farm accounting because it doesn't get as much attention as, say, growing the perfect dahlia or the tastiest tomato. But as a podcast for farmers who are trying to make a living from their farms, it's really important to talk about the business side of things too. because it doesn't matter if you grow the perfect dahlia. If you don't know how to manage the money side of things, you're not going to be in business for long. So I love the fact that we'll be able to talk about the farm side of things as well as the business side of things with you, Sarah. So without further ado, welcome to the Growing for Market podcast, Sarah Scott.
Yeah, thanks for having me. This is great.
All right. Well, first of all, with a bunch of farmers in the audience, can you tell everyone a bit about your farm and your accounting background?
Yeah, sure. So my husband and I, we have a couple kids here, and we have about 100 acres. We do kind of a mix between animals and crops, flowers. I love the flower side of it. So I've been in the field of agriculture for a long time. My dad was a dairy farm, and it was more of a hobby farm that he had for us. And then when I graduated, I went to school for animal science, and then I moved out west and worked on some agricultural operations out there. I was in production ag for about 5 years, and then I discovered that I really loved the accounting side of things. So I went back to school, got my master's, and then moved back to New York and I worked a lot of years for a firm that really specialized in ag. And then just, bought my own place and was trying to do everything I could farming on the side. So it's been great. It's been a really good journey. And when I first started in accounting, I had a friend and she was like, oh man, she said, I can't believe you're going back to school for accounting. She's like, those individuals tend to turn out to be very boring individuals. And I was like, yeah, but I'm applying it to something that I really love. So that keeps it interesting,
Yeah. Besides the fact that's a little stereotypical.
Yeah, totally stereotypical. Yeah, for sure. But no, it's really good. And I just feel really thankful to have that body of knowledge because it kind of helps me to see even our own farm through the more business lens, I guess you would say. So I worked for, like I said, a few years for a firm that had a department that specialized in ag. And then I also did some work in the financial services side for farm credit for a lot of years before going out on my own.
Oh, cool. Yeah, I see farm credit all over the place.
Yeah.
They seem to do a lot with our audience. Well, that's cool because we work with an accountant to help us with our farm taxes. In fact, we chose them when we moved to the area of central Maine here where we are based on other farmers we knew who said recommended them. And it is so worth it. They've saved us so much money. They've saved us more than we've ever paid them just because they know about the tax credits and stuff that I don't know how we would ever know about it. And just they know how to set stuff up and depreciate it and all that kind of stuff for farms. On the other hand, I like to think I should be a good question asker with a beginner mind here because my wife always did the QuickBooks for our farm. And it wasn't until I took over Growing for Market that I really started doing some of the QuickBooks for Growing for Market. So I know, I've done some work with QuickBooks, but not really with our farm business. So I've got a lot of questions.
Yeah, no, that's great. It's a lot. The nice thing is that I feel like there are so many opportunities for farm businesses in our country. There's a lot of federal support, a lot of support at the state level. And it does add some complexity. There's some accounts that don't even want to deal with farms at all because of that. But if you can find, people that enjoy it and that really kind of have a good understanding of how it works, it can be a real tool for sure to save on taxes and efficiency for your business. So,
absolutely.
Yeah.
Well, okay, so we're 3/4 of the way to the end of the year here. Are there any things that farmers should be looking at accounting-wise as we approach the end of the year?
Yeah, so this is hard for most farmers, and I can relate because I'd rather be outside. Everyone's trying to get harvest in, or they're trying to, prepare for winter, put beds to sleep, all those things. I guess in our northern hemisphere, that's the case, not so much in the southern areas. But yeah, if you're working with someone, they're more than likely knocking down your door to get a set of records from you. It's something, I would say the real advantage right now with programs like QuickBooks Online is that you can have your data because so much of it is automated now. In the old days, we did everything manually, right? So I'm kind of a dinosaur. When I started in this profession, everything was manual. And so you wouldn't get around to it till the end of the year. And people just didn't, unless they really were on the ball, they just didn't know where they were at financially. So, but now with automation available through the various software programs, if you're diligent throughout the year of just taking some time to do, the minimal amount of work that you got to do to get your books in order, you can have a set of financials for your accountant right around this time. And that could be used for tax planning, which is really important, especially for farmers, especially if you have an operation where you're kind of heavily capitalized, because you can really benefit from some of the deductions that come from those types of investments. So yeah, Yeah. And then just, I think one really excellent tax saving strategy is just trying to maximize retirement accounts as much as you can. I know it's not very exciting for people when they think about investing in retirement. Like, I'd rather go buy a new high tunnel or a tractor or something, but it's a wonderful way to basically grow your wealth because you are putting money into either a tax deferred or completely tax free account. And I guess I shouldn't say tax free, everything is taxed, but your earnings can be tax free. And so doing that really puts you in an amazing spot more towards the end of your life or the end of your career. And it's, like I said, it's just, you're really capitalizing on the fact that you can grow your wealth very quickly as opposed to other types of investments. So this time of year is when I am looking at financials and just giving people an idea, if they have some expendable income, to give them an idea of how much they need to invest in those types of accounts so that they can be at a certain point from a tax perspective. So, that can be really helpful for sure. So yeah, I would say just taking some time to get the financials in order around this time of year could be really helpful.
And as far as putting money away, is that like an IRA or what are the...
There's all kinds of different options.
Okay, so it's just, yeah, if you could line that out a bit, because I'm at the age, like, I'm starting to think, I probably should have been starting to think a lot about it a decade ago.
Yeah, we don't though, right? We don't. We're so focused on running our businesses and getting it going, investing in that. You just don't think of it.
Yeah, so how should farmers think about that then? Like, what options are open to farmers?
So I can tell you, if I had done things differently, even before I got into, our business and before, when I was just getting started with life, I did invest some in retirement and other types of investments, but I just didn't have the expendable cash. But even just doing what I could at that time was really important. And even when you're starting a business, it's the last thing you think about, but from a long-term perspective, it's going to really benefit. So just being able to find the sweet spot between investing your money back into your business, obviously covering all your operating and personal expenses, and then also having some set aside to do that. So it's not such a big thought when you're getting started, but as your farm becomes more established, you become more and more successful, it should become kind of a bigger thought in your mind, because not only are you growing your wealth from an economic standpoint, but you're also saving on taxes. And there's different types of plans available for, all the different entities of So if you're a self-employed sole proprietor, if you're a self-employed S Corp owner employee, if you have a partnership in your self-employed, there's different self-employed plans that are available for people. So usually, like my clients they'll discuss the tax side of things with me, and they'll work with an advisor, and just to come at it from both an economic and tax saving point of view, and then decide on a plan that they think would benefit them. So all the different plans have different limits as far as what you can contribute each year. They're based on your net earnings from self-employment. So it's, usually people will put some away during the year. And then when I do their tax return at year end, I give them an idea of how much more they can put in, and they can make a decision if they want to do that and save on taxes, or if they'd rather invest it in a tunnel or whatever they're looking for from a business side.
So that's if they've made a profit at the end of the year, you're talking about where to basically put it in retirement or invest it in equipment kind of thing. And are we talking about IRAs, right? Because I think people are familiar with working for a big company. Okay, because that's something I only recently learned, is that, tell me if I'm wrong, but there's some function where you can set up an IRA for your, like, a self-employed person or, a small business.
Yep, you can do. So it's called a SEP plan. So you can do a SEP IRA for if you're self-employed. There are simple plans. There's a solo 401k, which is a really excellent strategy if your farm is profitable and if you don't have kids and you have more expendable income. The solo 401ks are pretty high limits. So there's just various plans, and all of the different, like Edward Jones, Charles Schwab, all of the different financial institutions have more information on it. You can just Google it and they'll give you information about. All of their sites have information on the various types of plans. And then one of them, you can choose whoever you want to administer it. And then you can manage it yourself. You can have a financial manager do it for you. And then, go from there. Watch it grow.
Okay, well, good. Because I thought you had to work for a bigger company to have an IRA. And it's actually... So my brother-in-law is a financial planner. And so my payroll processor keeps offering to set up an IRA for me. And I showed it to him and he was like, the fees that they're trying to charge you are, I don't know if he'd use the word outrageous, but he was like, you can set up your own plan. So I think just knowing that, so that people, that they don't have to go through, say, a payroll processor, they don't have to be a part of a bigger company.
No. Absolutely not. All of those companies are trying to make money on your business. So you can go right into a bank, right? Walk right into your bank and open up an account if you want to.
Okay, so you can set up an IRA just with the bank that you're already using?
I don't know if some of the banks in our areas offer that. I don't know if all of them do. I haven't looked into that. But yeah, there are some banking institutions that you can set those up.
Or presumably your accountant could help you figure out where to park that money, if that's the right term. Your accountant could figure out.
Yeah, if you wanted to do it, you could literally log into Charles Schwab website and open an account right there and manage it on your own.
Okay, great. Well, there's 2 actionable solutions for our audience, right? Because I hate to get people interested with things and not know how to take the next step. So great. They can either talk to their accountant, talk to their bank if they want to just set up their own IRA, which obviously is a good idea.
Yeah, for sure.
Even if you want to farm till you die, it's probably good to have some money in the bank.
Yeah, definitely.
Okay. Well, I know one thing I've heard of a lot of farmers doing is to wait until the last month or 2 of the year to assess the profitability, like you were just talking about, of the past season and buy equipment or other big purchases at the end of the year if there was a profit to draw down their tax liability. Is that a good strategy?
So it can be. We definitely have used that strategy at the various firms and, various employers and other people that I've worked with. We've used that strategy. But the thing to think about is I hear a lot from a lot of people like, oh, I want to go buy this because I can take a deduction for it. And so, yeah, that's a great thing. But like we talk about, the terminology, I used to work with a guy and he'd always say, don't let the tax tail wag the dog, right? So it's like you want to think about the economics of each transaction and then consider the tax, right? Like, does this make sense for my future? Like, am I going to utilize this asset? Is it going to be helpful? Is my return on this investment going to be lucrative? Does it make sense? So it's not just like, I'm going to go buy this item because I want a deduction, right? So you can save on taxes there's other strategies like we just talked about, retirement planning, investment accounts. You can do different strategies for tax savings. It doesn't necessarily always mean just running out and buying something for your business. Sometimes it does, for sure. But it's just a matter of where you're at and what your goals are. So just being smart about it, really.
Okay. So that's if they have some money at the end of the year, but they don't necessarily need a piece of equipment. You're saying one of the alternatives would be to put some of that money into an IRA or some kind of savings account.
Yep.
And now let's take a minute to hear from our sponsors. It's with their generous support that we can bring you the podcast for free. The Vermont Compost Pre-Buy Sale is back with 20% off orders placed, paid for, and shipped by October 31st. Since 1993, Vermont Compost Company has grown from a small, local operation to a company supplying premium soils to thousands of successful growers all over the country. Vermont Compost Company carefully sources the highest quality materials and amendments to create manure compost and manure compost-based living soils that are approved for organic growing. In addition to product consistency, growers can depend on Vermont Compost Company as an invaluable resource for a breadth of soil and plant knowledge and the technical expertise it takes to grow organically in an ever-changing environment. Each fall, Vermont Compost Company offers a pre-buy sale to incentivize ordering your spring soil before winter settles in. Early bird customers save 20% on orders placed, paid for, and shipped by October 31st. For more information, visit vermontcompost.com/prebuy or call 802-223-6049. Vermont Compost Company, living soils for organic growing since 1993. Today's episode of the Growing for Market podcast is brought to you by BCS America. On our farm, we've had our BCS two-wheel tractor for over a decade, and with no belts to slip, its all-gear-driven construction is still going strong. Though we originally got it for rototilling, we kept it even when we went mostly no-till because it can do so many other things around the farm. From snow blowing to making raised beds with the rotary plow to chipping wood, it can do just about anything you might need on a farm with the right attachment. Need to shred a cover crop? A BCS flail mower will make quick work of even the most vigorous cover crop and chop it up so it breaks down quickly. Want to stir in compost or amendments without inverting soil layers? A power harrow turns your BCS into a precise tilthing machine with depth control so you don't mix deeper than you want to. With so many attachments to choose from, it truly is the Swiss Army knife of farm implements. It's why, instead of saying two-wheel tractor, so many people just say BCS. Tractors and attachments are on sale through the end of the year. Visit bcsamerica.com to find sale pricing and your nearest dealer. And now, back to the show. When you put it in an IRA or savings account, how does that affect the taxability? Does that take away from your tax liability if you move money into an IRA or a savings account?
Yeah. So if you are contributing to a traditional plan, you'll get what they call like an above the line deduction. So that just means they're taking all your taxable, your income, your total income, and reducing it by whatever your contribution is. The benefit of investing in your business is that it reduces the self-employment tax liability. So that's the big hit for business owners each year, right? Like when you're an employee, you get a paycheck and your employer is paying for the full amount of your self-employment tax each year. So the full amount of Social Security and Medicare for you each year. You never see that money because they're deducting it right off your paycheck. So you don't even realize it's gone, right? So I get people that come to me, they're in their first or second or third year of farming, and they're like, why is my tax so high? I don't understand this. And so the other thing is that your employer, when you were an employee, was paying half of that tax for you. So it's really like an employee benefit. We don't think of it that way at all when we're employees, but it is. It's an employee benefit. It's not until you're self-employed that you realize, wow, like that was a big chunk of money they were paying on me. So, there's some few strategies to mitigate that self-employment tax. Contributing to IRAs don't, but it's like your previous question about investing in farm assets or prepaying some of your expenses, seed, whatever you're prepaying for the year. Those types of expenditures will help to reduce that self-employment tax.
Okay. That, of course, means you have to have your books done before the end of the year to see how,
Yeah.
they can't be completely done and dusted. Let's see. If you need to buy something by the end of the year, obviously you're not going to know how you did until the very last day. But I guess maybe that goes back to what you're saying about having, like, keeping up with your books, and maybe that's an advantage of not having everything on paper, is that if you keep up with your books and are feeding the numbers in there, then you can get a read, let's say by November. You can get a read and see if you're making a profit or not, and if you need to go make that big seed order in December instead of January.
Yeah. So for example, with QuickBooks, it's all automated now. So everything just gets, like, your transactions from your bank get downloaded right into the system, and you match those up, you categorize them, and you have an income statement right there. So it's not instantaneous, but it doesn't require as much work to get your books in order. And so, at this time of the year, people have a pretty good idea of what their, you can understand fully what your earnings are up to this point.
Yeah.
So you might have an idea of what else you're going to make before the end of the year, right? Like if you're a brand new business, maybe you won't know how the last quarter is going to line up. But if you're pretty established and you've been doing this for a few years, you kind of have an idea. If you're farming in the northern climates, right, you probably earned a good chunk of your money by now. Maybe you've got more coming in between now and the end of the year, but you probably earned a good chunk of it by now. So you have an idea of kind of where you're at or where you will be at year end. And then you can use those numbers to plan and make some decisions, as to how you want to invest or take more deductions against your business income.
Yeah. Okay. Well, that's good. Hopefully that's the one option some people might not have known about, is that they can put it in a savings account instead of feeling like they have to go out and spend it.
Yeah. Yeah, for sure.
So I looked at your Facebook page, and on there you had some short videos and things talking about tax credits, specifically benefiting farm operations. Are there any tax credits that direct market farmers should be aware of?
Yeah, so each state has their own credits that are available for farmers. And like in New York State, it's pretty lucrative for farmers here. They make a big difference on the bottom line at the end of each year for farmers. So like, for example, a lot of the states have, I shouldn't say a lot, but there's a few that I know of. And New York is one of them, where we have the investment tax credits that are available. So you invest in farm equipment or whatever, and you'll get, 20% as a credit on the New York State side of things. There's property tax relief here. The other thing about the investment credits is if you're a new farmer, they will give you full refunds of your investment. So it can be definitely very lucrative for even beginning farmers here in our state. There's property tax relief, so a full refund of your state school taxes here, which can be pretty sizable, especially for larger firms in our area that have pretty high income taxes. New York State has really very high property taxes. So that can be it's pretty important for those farmers here in this area. They can get a full refund of there are some limitations, but most of the farmers that I do here, they're able to get a full refund of their school tax credit, of their school taxes via that credit. There's also credits available for manufacturers, and farming is manufacturing. So, there's another provision for property tax relief here in our state. I was looking at some of the taxes in other states too. Like I thought this one was kind of cool, a farm to food bank credit. So in other states, they'll give you credits for, any donations you make to local pantries. There's beginning farmer tax credits. So if you're just getting started, those are available. So it's just a matter of, so if I was a brand new farmer looking for someone, I would just reach out and that would be one of my questions, can you help me with these state tax credits? Can you tell me what's available for farms in this area? And that will, that can be pretty important.
Yeah, that's a good reason for farmers to work with an accountant, right? Because these, like you're saying, these taxes vary from state to state. And so if you work with somebody, especially somebody who is familiar with the, farm environment, they should be able to tell you what you're eligible for, since it does vary state to state. We noticed that actually my wife and I, we worked on a farm outside of Ithaca for a while, and it was around the time, it's a long story. We started our first farm in Pennsylvania, and it didn't work out due to family issues. And so we were looking to restart our farm somewhere. And we looked around in New York State a little bit, and we noticed it was very expensive, especially compared to somewhere like Maine. It seemed relatively cheap. So that is not why we ended up here. There's a lot more to it. I think it's fair to say if we saw the perfect farm property in New York State, we would have made it work. But we did notice there was a big difference.
Yeah, it's huge. It's really huge. I will say, of some of the different places that I visited, I do love our climate here. It's a shorter growing season compared to Virginia or Georgia, some of the southern areas, but it's nice. There's a lot of fruit farms up near the lakes. So I'm in the kind of upstate, central western region of New York State. And so we're right off the lake, and the lake really moderates the temperature. So fruit farmers can be really, really profitable in this area. So it's kind of neat to see, different operations thriving here because of climate conditions. And right now we're in a drought, which is kind of sad. I think I'm losing a lot of things outside right now, but that's just the way it goes. So,
yeah, we're in a severe drought here in central Maine as well. I mean, it's amazing. We have a little bit of hay land that a friend of ours cuts, and usually he cuts it and it grows back. And it's like this year he cut it, and it looks like, if we finally got a little bit of rain and it started to grow, but it more or less looks like right after it got cut, which is unusual up here. Typically we get it's cool enough and we get enough rainfall that growers will get a second cut up here, and not this year, or at least here.
Yeah. In most normal years, I kind of manage our pastures. So I keep our stocking rates pretty low for our sheep pastures, and I'm able to not feed any hay until the end of October, 1st of November. And I've already had to get started just because it's been so dry in our area. So hopefully that changes soon.
Yeah. We're definitely hoping. It doesn't look that promising, but we are hoping for a little bit of rain before the snow flies, just to get the ground recharged. Thinking about next year. So I don't know. We'll see.
For sure. Yeah.
Can you tell us what farm income averaging is, and is it ever a good fit for direct market farmers? I've heard of this, but I don't really understand it. So would love to hear an explanation.
Yeah, sure. So farming income it's really subject to fluctuations, based on, especially, we used to, when I was working at Farm Credit, we had some clients that were larger, commercial farming entities. And there's so much economically that can really fluctuate the prices of various commodities. And so you might have just a huge spike in income in one year as compared to the prior years, right? So farm income averaging, it gives you the opportunity to you're averaging your income over prior base years. And in doing that, you're really taking advantage of the tax brackets from prior years that were not filled, right? So if you have a spike in income in the current year, and if it's bumping you up into the next tax bracket, if you're able to average that income over the prior 3 base years, then you can really benefit from the brackets from those years that have not been filled. So it just gives people the opportunity to kind of level out their tax liability over the years.
And I'm assuming the default is just year to year accounting, but is that the kind of thing that is that the scenario? If you have one unusually like really good year, you would say that's a conversation you would have with your accountant and say, hey, want to switch to 3-year income averaging.
Yeah. So each year, like when I look at my farm clients' books, you're kind of comparing to prior years and seeing like, can they benefit from this averaging, right? Like, was it a really good year? Were prices higher for some reason? Was the demand in our area higher? Maybe the yields were low for some crop. And so there's a much higher demand, higher prices. So especially like some of our farmers in this area, in bad years, they get so much support from the government that their income can be even higher than it is in good years. So it's just a matter of, doing that comparison from year to year to see if they can benefit from the prior year's tax brackets.
Okay. Yeah. Well, that's good. I can think of scenarios where that would come in handy.
Yeah, for sure.
Well, I am assuming that most of our listeners are using QuickBooks. You can tell me if I'm wrong about that as far as your clients go, but do you have any recommendations on accounting platforms? So I feel like just in the last year or so, there's a couple new platforms out there. I don't know if platform is the right word.
Ambrook.
Yes, Ambrook
Yeah.
and Ambrook, and I think there's another one that say that they're like better than QuickBooks, but for farmers. Do you have any, I guess, can you confirm or deny that is QuickBooks what you're using? And do you have an opinion about these platforms that are coming out as accounting for farmers?
So I don't feel qualified yet to have an opinion. I've always hoped that there would be some more options for people and, the farmers and my clients, just because Intuit has kind of ruled the world since I started my career, really. It's been QuickBooks. And the customer service is not always wonderful. And so even though I do a lot of work with them, I think it's a good software. I have always kind of hoped that there would be some other companies that would give them a run for their money, because I think they have a lot to improve when it comes to customer service. But I have not done a lot. I've been just so busy this year. I haven't done a lot of research yet to look into some of those I haven't tried them out. I've thought about even just contacting like Ambrook, some of the other ones that are for farmers, and just saying, hey, can you give me some more information? Give me some demos, like show me why I should promote this to my clients. But I just haven't gotten around to that yet. So I'm sorry that I don't have a great answer for you on that question right now, but hopefully soon. I will say that I've used various ones. I've used Peachtree. I've used various accounting platforms, and they're pretty similar across the board. Most of the time, like if you figure out how to operate one, you can pretty well intuitively operate most all of them. So I guess really you just want to work with your accountant and see what you can use that would make it the most efficient for both of you. Because as a farmer, you don't want to be spending a ton of time at it. So you just want to choose something that your accountant knows and that you can be the most efficient at getting the work done so that you can get back outside. Because they are very similar. So just comparing the costs too of the various programs, and then working with your accountant they'll be able to recommend. And I think probably 90% of accountants right now, 99% of them use QuickBooks. It's the big one right now. So has been for years.
Okay. Well, thanks for confirming that, because we ran an article in the magazine a few years back as actually talking about QuickBooks and the other platforms. And this was before Ambrook or some of the other, I think the newer ones that are specifically for farmers were on the scene. But that's what the person who wrote that article had an accounting background. And she said that despite the alternatives, most people were still using QuickBooks. So thank you for confirming that.
Yeah. And I have some clients, like throughout my career, I've worked with smaller farms that they just use Excel and that works for them. And as long as they're reconciled to the bank statement, your accountant can work with that as well. So especially for like new, I had a brand new farmer reach out to me and they were like, they were ready to just run out and buy QuickBooks right away. And it's like, you can do a lot of this when you're just getting started. You're probably okay if you have some downtime in the fall. You can do a lot of it on your own. But as your business starts growing and becoming profitable, that's when you want to think, how can my time be used better to actually move the needle for the profitability of this business as opposed to sitting there cranking out numbers? So, it's not something you have to run out and buy right away. But as you get more and more profitable, you want to think about outsourcing some of that busy work.
You mean like having somebody else do your bookkeeping for you?
So not necessarily just having a subscription to QuickBooks. You can do it yourself through QuickBooks. You can work, some accountants provide training. There's thousands of QuickBooks videos that they can help you answer questions that you might have. But I will say, I do see a lot of people that want to do their own accounting, but they really don't have time for it. And they're so busy with other things. And then when it gets botched, it's hard. It makes it a hard process for your accountant. So I will say, if you have the time and you're genuinely, you want to do it on your own, you're interested in it, just take the time to do some training, even work with your accountant. Like, I help those clients of mine that want to do it on their own. I just help them. I give them some training, and, they call and ask questions, or they'll shoot me an email. But really, that's where you really have to put the time in to really learn how to use it. So, because it's easy to get botched. I've had clients that they're using invoicing, but they're not properly receiving payments on those invoices, and then their income is overstated. So just things that happen, and you don't ever want more income on your books than what's in the bank, right? So from a tax perspective, you don't want to botch your books up, because it can create not so good outcomes.
Yeah, absolutely. Okay. Well, so regardless of what platform people are using, do you have any tips for what smart bookkeeping would look like for farmers? Or I don't know, like best practices, for accounting, whether they're using QuickBooks or another platform?
Yeah, I would say just making sure that you're reconciled. So from month to month, just taking the time to do those reconciliations or have someone do them for you. That's pretty important. If you're ever audited, you want to make sure you have that reconciliation to your bank statement, because that's what gives your tax return validity, right? It validates what the numbers that you're reporting. So that's pretty important, just being reconciled. We already talked about just reaching out with questions to your accountant when you have them, looking at QuickBooks videos so you can learn how to. And I don't mean videos that there's every Joe Schmo out there who's trying to make money on bookkeeping and whatever. I mean, go into your QuickBooks account and look up videos that are put out by Intuit. So that's helpful. And you can also call. You can call Intuit. And like I said, they don't always have the best customer service, but when you get through to them, they will help you if you have questions about things. Yeah, I think just staying with it, staying and keeping on your toes with it.
So like staying current. So I think you said, like every month, would that be a best practice to at least reconcile on a monthly basis? Because I can see how so much happens over the course of a season. I mean, this has happened to me.
Yeah. If you can. I don't. Even our friend, I don't keep it reconciled from month to month. But if we're starting to slow down now, right? So I might catch up. I might be reconciled through the first part of the year and then take a break because I'm too busy outside, and then get caught up as soon as I can. But you just want to get it done before the end of the year so that you have that window of time to make tax planning decisions before the end of the year.
Okay. So just keep good records and get back to it
And then I will say too, there are some people, so it's changed so much, right? Like the culture of farming has changed so much over the years. There were so many more family farms in the old times, right? Like now it's you really have to be business minded if you want to be successful. So it's treating it like a business, right? Like there are people out there that don't really look at their numbers that much. Like they want to be outside farming that, right? Like I'm one of them, right? Like when the sun's shining, I don't want to be. And so it's totally normal, but so it's really common to fall into the trap of, I got to get these numbers ready for my accountant because I've got to file a tax return, right? So you're paying the money for a QuickBooks subscription, or you're using an accountant to help you out, but are you really getting the value out of those numbers? Not really. Not if you're just only keeping books for tax compliance. You want to keep books so that you can do some analysis and look at your numbers and see okay, those beds over there are making me some good money. Those are not. These crops are doing well. These ones are not in my area. Just analyzing the numbers so that you can see where you are earning and where you are not earning, so that you can make decisions for next year. I'm going to plant this much of this crop. I think it's really valuable. And I think a lot of people don't think about the numbers from that perspective so much. So yeah, if you can, you can have a really basic chart of accounts for a tax return, but if you really want to analyze your numbers, you can set up classes in QuickBooks for various varieties that you're growing. You can really just use it's easy to get really in the weeds with financial ratios, but you can use just the basic profitability ratios to see how your farm is performing over a period of time. If you're growing, if the farm is growing in profitability, if it's not growing, and then, what's driving that, what's causing that, what can I change from an efficiency standpoint that's going to reflect in these numbers for future years? So those kinds of questions, just kind of really learning the business side of things, I guess I would say.
Okay, that makes sense. I think most people who have done taxes for a farm business before are familiar with the idea of depreciating the value of big equipment purchases over a number of years. Are there any rules about what can be depreciated? And also, I know there's an option to do accelerated depreciation with some purchases. I don't understand it well enough if those are two separate questions, but if you could either answer them together or in two parts, however it makes sense.
Yeah, sure. That's one of the big things we look at when we're tax planning, right? Is how we can utilize depreciation to get us to a tax standpoint where we want to be, to a result where we want to be. So, you're looking at when you're considering how you're going to spend whatever money you have left budgeted for your business at the end of the year. Are you going to use it to build a building or to buy some equipment? So there's different rules for the different classes of assets. So there's different class lives, and then there's different with accelerated depreciation. You can take accelerated depreciation on equipment, but not all of the buildings qualify for accelerated depreciation. If you have single purpose agricultural structures like high tunnels, you can accelerate depreciation. Storage buildings, there's not as much opportunity for that. So just taking all of those things into consideration when you're coming up with a tax plan for how to spend your money at the year end can be important. Did I answer your question? Was there another part of it?
Well, I have a follow-up. So why would you want to do accelerated depreciation? Is it that whole thing reducing your tax liability at the end of the year? You say you depreciate that tractor faster, or you tell me?
Yeah, you can. So some clients have a feel for, they might have an idea that maybe you had a really good year. This was a really good year, and for whatever reason, it's not going to be the same next year. So maybe you want to move some of the depreciation on that asset into the current year rather than waiting and depreciating it out over the next 7 years.
Okay.
Or 5 years in some cases for farms. So it's just a matter of kind of having a feel for the economy and what the demand's going to be. And if you have an idea of if you think you're going to be more or less profitable in future years, then you can make decisions as far as, do you want to defer some income? Do you want to pull some of your contracts for in the current year, try to get some of your contracts in the current year so you can claim income in the current year? Do you want to prepay some expenses now as opposed to later? Do you want to go buy that tractor or put up that tunnel or whatever now instead of waiting? So those are all just some things you can determine when you're considering what the future years might look like for you from a profitability standpoint.
Okay, so if you had, for whatever reason, weather or something, if for a one-time contract or something, if that you had a banner year, just go ahead and depreciate to offset the income in that year if you think it's going to be one-off. Okay, that makes sense.
Yeah.
All right. Well, let's talk about the big picture. When and how should farmers be looking at profit and cost analysis for their whole operations?
Yeah. So the when of it is as much as you can, whenever you can, right? So I just think of it as putting the attack on your costs. So there's all kinds of books on profitability. And I forget his name now, but there's a man, I read part of his book, and he's just saying how you pay yourself first, take care of any debts that you take care of, and whatever is left, operate your business on that, right? So it's going to make it more challenging for your tax accountant if you're profitable in that way. But if you're running a business, you want to be profit driven, right? So you're going to pay yourself first, whatever's left, you cover your expenses. So if you want to have that kind of mindset, it's all the time looking at your costs and evaluating, do I really need this on our farm? Is this imperative for the growth of my farm? Am I going to get the return on investment that I want from this? So all of those questions, right? Can I get a better price somewhere else and have the same quality? So I think that's just an ever evolving process for business owners and something that's constantly in the back of your mind. Budgeting. So budgeting is kind of making a plan for your future based on how you think the economic situation is going to be, right? So as soon as you get some data organized, you can start budgeting for future years.
Okay. Is there anything else that farmers need to know specifically about budgeting? Or is it just a matter of, making sure your numbers are right and keeping up with them enough that you have some heads up and you can see, whether you had a good year or not, and to be able to plan for the future?
Yeah. So accounting is really looking at historical data, right? And budgeting is you're forecasting into the future. So I know when I was working for Farm Credit and the financial sides of things, we would do some budgeting for clients. The traditional way to do that was really in the kind of the fall months, like right now, and then into the following January, looking at budgeting. That was kind of the traditional way that we did it, but you can do it anytime. Whenever you get your data, whenever your data is organized, you can budget at any point in time.
Okay, so that would be an advantage of, I guess, not leaving it all to the end of the year.
For sure.
But I also get it. The middle of the season is busy, so you may not be able to do like monthly, for example.
Yeah, your listeners are farmers first. So.
Yes, yeah, absolutely. Well, and that's why I really appreciate this discussion, because I think that in my experience, most people that I know, and myself included, got into farming because we loved it, or the lifestyle, or basically it wasn't like a cold-eyed business decision like, I think I can make the most money by going into farming. And so I've known a lot of people that don't have great business skills, but that's why it's so important to have these conversations, because it's not, farming tends to be an industry where people have other backgrounds, and it's, the size farms, they don't have a CFO or something, it's like most of these small farms are wearing a lot of hats, including,
right,
at least working with an accountant, they can get help on that side of things and don't have to do it all.
Yeah. And really, to make it as your main income in this, like in our current economy, you really have to, right? Like, it's not, with all the vertical consolidation that's happened within agriculture, you just have to be business minded in that way to really make it. If it's your the bread and butter for your family, for sure.
Yeah, it seems like a tough environment right now in general. And, I think a lot of some advice that I consider good, that I tell people a lot in this segment, is to try to decommodify their produce. So I think that's one of the benefits of being a direct market farmer, is that you can, instead of selling into a global market for tomatoes or flowers or whatever, you can say, these are grown on our farm that's 10 miles from your house, or, whatever. Hopefully not. So hopefully our readers aren't subject to like paying the minimum commodity price on all these things, but still it's still a tough environment.
It is. Yeah. And it's been really fulfilling for me to I've kind of shifted our business a little bit, just trying to support more of like the local farmers that are trying to do more of the retail direct to market. It's just been really fulfilling for me, for sure.
Yeah. That's good, because I know we've profited a lot from our relationship with our accountant. I think they're really good, both because we have to pay them to do that, but I feel like they get the job done a lot faster than we would. And, they're going to do a better job too. So that's great that you're able to help the farmers in your community. And yeah, I get maybe somebody who's really small doesn't want to go there, but I also think, I don't know, I think it's something I've learned over the years. I like to think I've gotten a little bit wiser, as far as, I think when my wife and I, we first started our farm, I was just trying to do everything, like plumbing, electrician work, it's farming.
Yeah. And that's the entrepreneurial spirit, right? Like, that's what it's really, as you become more profitable, that's when you want to start thinking about, what can I outsource so that my time can be spent doing things that really move the needle for this business. It's kind of the mindset.
Exactly. Yeah. That's how I look at it, is as much as it may go against the entrepreneurial spirit for somebody to be hiring out those jobs, I think of it like our job is to be good in the field. And, the more it's probably worth it to, even if you have to pay somebody else to do something, like, yeah, you could do it, but it's probably going to take it way longer than, somebody who's a specialist, and hopefully they'll do it right. Whereas I don't know, some of the construction and different things that aren't really my forte, weren't done the best, but I think it's worthwhile.
Yeah.
One thing that really that I hadn't thought of, but occurs to me now that we're talking, is that I know there have been a lot of changes this year with the grants, and a lot of funding has gone away and things like that. Have there been changes on the tax side of things that are going to affect farmers, or is it too early to tell, or do you know?
Yeah. I mean, it's all kind of coming down the pipeline. We're all sort of researching that stuff right now. There's always been like conservation easement grants. There's always been traditionally a lot available through ag program payments. So it's just, I think we're all anticipating changes happening and hoping for the best. But yeah, it'll be interesting to see. Like, I'm doing some research on some of those things right now, and just trying to figure out how it's going to impact my clients, so that I can be proactive on looking at financials and seeing making a plan for how to handle some of those things. So, yeah.
So talk to your accountant and stay tuned.
Yes, exactly.
Well, Sarah, those are the questions that I had thought up for you. Is there anything else I should have asked you about or that you'd like to say before we let you go?
I guess from an accounting standpoint, we've talked about the big things that I think about with pertaining to clients. One thing I would say more from just a successful farming vantage, I just feel like if I was starting over, definitely I would have a focus on the business side of things, but I would have put a lot more time and effort into marketing. I think that, I mean, obviously as a direct to market operation, everyone has marketing kind of in their mindset, but most everyone, most people are farmers they just want to be farmers, right? But it's like, when I was with Farm Credit, we had there was all kinds of young people trying to get started in the business. And it was really the ones that really took marketing seriously and had budgeted for that specifically that were able to just take off and thrive. Because people, especially if you're direct to market, people want to know your story, right? Like these are things that most people understand already, but it's like they need to hear your story. They want to hear your story. They want to be connected in some way with what you're doing because so many people long for that connection to the environment and to the land, right? So I think definitely the business side of things is important. And especially when you're getting started, just the marketing part of it is so imperative to think about and invest in for sure.
Yeah, that's really good advice. And some of the platforms don't even cost anything other than your time.
Right.
I think you're right. I know we have an article in the archives. I don't know. You probably know who Erin Benzacane is.
Yeah.
Well, she wrote an article a number of years back called Become the Face of Your Farm, saying that I think it's something I take to heart for Growing for Market too, is, we're a small business. And so, but one of the things that I think big businesses want is a face. That's an advantage that small businesses have, is that we aren't a huge corporate conglomerate. And so if you have a farm and you have a smartphone, I know there's good and bad things about social media, but I figure your average farmer is surrounded by beauty and, their crops and what they're selling. And if they can, just on some kind of a regular basis, just take a picture of the crop as it's growing and as they're harvesting it, and they can tag their local market, that could be a great way for people to find customers. Because, people want to know where their food's coming from and see the face behind it.
That's what's so lovely and fulfilling about the CSA model. Like we have people here, friends and acquaintances, they just want to come to the farm. They just want to see it. They want to be a part of it. They want to do U-Picks. They want to be connected somehow. And they love that side of it. So I think it's such an opportunity for people, for sure. Yeah,
absolutely. And it's because so few people farm now, I think it's like 1% or something. It's such a small number. It's like one-ish. We can just, it's only like 1% of the population is really doing any kind of farming. I think that people do. It's, it's not a common thing now for people to see the farm. And so people like to and show their kids and where their food's coming from and all that kind of stuff. So people need to remember they've got a story. So share it.
They need to understand the work that goes into it too. If we're going to revolutionize the food system, they have to understand what the work that's going into it. So it kind of in their mind justifies having a bigger investment into just the quality that they're getting. So, yeah.
Yeah, absolutely.
Sure.
It's probably good for them to see who and what they're supporting, when they spend their dollars, whether it's a CSA or farmers market or however.
Yeah, absolutely.
To realize they're making a local business happen when they patronize it. So they need to see that.
Yeah.
All right. Well, I really appreciate you coming on to talk about this stuff because I don't know a whole lot about it. And I feel like I know a lot of the farmers that I know aren't real financially savvy. So I do appreciate it. And where can people find you online or social media or wherever you want people to look you up?
Yes, our business is Allegiant Tax and Accounting Services. We have a website. Our farm is Scott Farm and Flour. We have Instagram, Facebook. My email is sarah@allegiantfinancial.net.
Okay, cool. Well, that way people, it does sound like you would mostly want to work with people in New York State. Is that right? Because you're familiar with the tax environment specifically. Like you were saying, there's a lot of differences for the ag from state to state. Or do you have out of state clients too?
I do both.
You have both. Okay. All right. Great. Well, that's great. Thank you for sharing that. Then that way, if people do have more questions, they know how to get a hold of you. And it's a really important subject. So I appreciate you taking the time to talk with us about it this morning. Yeah, it was fun.
Yeah, my pleasure. I enjoyed it.
Thank you very much, Sarah. I really appreciate it. And I hope you have a good end to your farm and business season.
Yes, thank you. Same for you. Are you guys wrapping up on your farm?
Yes, we kind of wrapped. So the main thing going on our farm now is my wife has a nursery business. And so that's like, we're already wrapped on that for the season. Because when I took over Growing for Market, I mean, I did have a lot of like garden and homestead projects, but the main like commercial thing going on our farm now is I have to give my wife all the credit for that because it's really her business.
Yeah.
So we're pretty on that. We still got a lot of garden going on, but that's, the business part of our farming is actually wrapped for the year.
Yeah, because you guys are even colder up there than we are here, and we're pretty much wrapping. I mean, people that have tunnels are still going here, but without tunnels, everything's pretty well harvested by now. So we're getting there, anyways.
Yeah. We probably are a little colder here in Central Maine. It's hard to say. I don't know. It seems like upstate New York's pretty cold too. So
yeah.
But yeah, we're definitely at the end. All the farmers around here, we're definitely at the end. And we've had our first frost, like not a super hard frost, but we've had first frost at this point and people are winding down, getting stuff out of the field. So
yeah, well, good. Awesome.
All right,
Andrew. Yeah, enjoy the rest of your day and thanks so much.
All right. Thanks, Sarah.
Take care.
Thank you for joining us for this episode of the Growing for Market podcast. If you've been enjoying the show, please consider giving us a follow and a rating or a review. It really helps others find the podcast. For more tips and tricks from farmer to farmer, check out our magazine at growingformarket.com. Whether you're a commercial grower or just want to grow like one, subscribe to Growing for Market magazine for the nitty-gritty of growing, marketing, and the business of market farming. We publish 10 issues per year with articles written by experienced farmers on topics ranging from tools and techniques to farm business operations and marketing. If you've been listening to the Growing for Market podcast and haven't yet checked out Growing for Market magazine, we've made a change so you can try the magazine for free. We've added a free month to the beginning of all first-time subscriptions. Try out the digital or paper magazine for a month, and if it's not for you, cancel within 28 days and you'll never even get billed. All subscriptions get you a year of the magazine, plus 150 downloadable back issues from the last 15 years and over 1,700 archived articles. With digital subscriptions starting at just $39 a year, head on over to growingformarket.com and subscribe today to benefit from over 3 decades of writing by farmers, for farmers, in Growing for Market magazine.